And I know you want to make X this fabulous town square free speech platform, but that unto itself that has created such a distraction of all of these things. This is the conversation we're having. We're not focused.
One word, Kanye. Technically, I'm actually rooting for Snowflake. If Snowflake comes in with good numbers, but also good guidance, that's going to bode very well for likely AWS and what's going on there. It could even bode well for kind of the state of Palantir if they have good things to say about AI monetization on the software side. Damn, man. I kind of almost want to listen to their conference call instead of Snowflake's. Howdy, folks. Hope everybody's doing phenomenal. Oh my gosh. Oh my gosh. Oh my gosh. Foot Locker. Holy smokers. This ain't no dang jokers. It's actually moving up. It's moving up. It's grooving up. 15% plus move here for Foot Locker. I like it. I like it a lot. But we'll look at their earnings. I've already looked at the numbers. Obviously not impressive, but remember what I tell you guys. When you're priced for the end of the world and you come in with not the end of the world, it's only upside. Foot Locker was a stock that was priced for end of the world. They didn't come in with the end of the world, and look what happens with that stock price. I mean, absolutely huge move up there, right? Now, in order for the stock to get back to $40+ again, Mary Dillon obviously has to execute in 2024. Come through with the numbers that EPS has to start skyrocketing in 2024. Obviously, they got to get all the restructuring done and things like that. And then it'll be back to a $40+ stock. But in terms of going from, a $15, $16 stock to 27, that's just don't come in with the end of the world. And that's exactly what Foot Locker did. And obviously, huge move up there, right? Honest making another upward move. Honest back over $2. It has not been over $2 in a while. Last time it was over $2. You have to go back to March. Wow. So this one's had a pretty tremendous move here recently. Look at the 1 month on Honest. 84%. Something's going on with Honest. Something. I don't know what's going on, but something's going on. You don't just get 84% in 1 month without something going on there, okay? We know, obviously, Carla has the ship pointed back in the right direction. That's good. It's still not all clear. We got to get to consistent, profitable GAAP EPS. That's the next step in the right direction for Honest, but something's going on there. Somebody's buying in. I don't know who. I don't know what. I don't know if it could be another company like a Procter & Gamble or somebody that competes against them that says, you know what, let's own a bunch of this company. They've shown tremendous growth over the years and growing their business. So let's position into them and buy a big ownership stake. I don't know if it's a fund. I don't know what's going on. But 84% in 1 month is not natural at all. So something's going on there, okay? That's all I'll say about that. After hours, we have Snowflake report and we have Salesforce reporting. I will be live streaming not only those earnings here after the bell, but we will also listen to the entire Snowflake conference call. And the reason being is that Snowflake conference call is not just important for Snowflake. It's important for Amazon Web Services in many of the big tech companies. It's important for even companies like Palantir, because Palantir can kind of get grouped in many times with Snowflake. It's important on many different fronts. If you're asking, am I rooting for or against Snowflake? Technically, I'm actually rooting for Snowflake. If Snowflake comes in with good numbers, but also good guidance, that's going to bode very well for likely AWS and what's going on there. It could even bode well for kind of the state of Palantir if they have good things to say about AI monetization on the software side for the company overall. I think that's very positive. So I'm rooting for Snowflake after hours, although I do not have a position in it. And should I have a position in Snowflake, right? Should I take a gamble in Snowflake? I don't know about that. Snowflake's not the cheapest stock in the world. Let's just put it that way. Based upon next year's numbers, 162 forward P. Oh my goodness. Now, last quarter, they actually beat by 12 cents. But they only beat by $11 million. Let me see these earnings estimates for snowy Snowflake. I mean, the good news for Snowy is these are really low estimates. For Snowflake, these are really low estimates, guys. 28% revenue growth for this quarter and only 25% for the January quarter. Those are actually exceptionally low growth rates expected for Snowy Snowflake overall. Because this company was growing significantly above those rates, right? I mean, if we look back, 35% growth in the July quarter, 47% in April quarter, 53% in the January quarter, 66% in October. So these are, I am wondering if Snowy could come in with a beat on this quarter's numbers and then a big guide higher than what analysts are expecting for next quarter. It kind of makes me want to take a gamble on it, but I don't know about that. Let's see where options are at. So 175s, I would need to pay. If I could pay less than $10 for those that expire this Friday, maybe it's interesting. Let's see. So 175s, I would have to pay $865. That's not too bad. Because you can say on a 175, the stock, if it was to, a 10% move on it, like a Snowflake's not crazy to move 10% tomorrow, right? So a 10% move would be $17 roughly a share, right? So if I can pay half of that roughly, then we could be talking about a double up of the money tomorrow if it makes a 10% type upward move, which is, once again, I don't think is crazy to assume that one moves up 10%. So it's actually an interesting gamble. I don't think I'm going to do it. But it could be an interesting gamble. I'll just put it like that. 1 year, 24% gain. Year to date, 29%. Yeah, I mean, geez, if you go 200 strike to expire this Friday, which could Snowflake go to 200? Sure. But they're going to need to come in with some insane numbers for the stock to go 200. 200, you got to pay about $1. Well, let's call it a little over $1. Damn. That's heavy. A 202.50, you still got to pay $1 basically. So you need the stock to go to 203.50 just to break even. Now, if Snow goes to 210, 230, 250, something like that, oh my gosh. Like, you're rolling in the money. But I was just going to see Amazon calls. Let's see. Amazon. Because I was thinking if Snow moves big, Amazon probably going to move big tomorrow. Let's see what you got to get for a 146. 146, 151. So I could do Amazon calls. I could. 147 costs $1. It's not very much. If Snowflake skyrockets, it's probably going to pull Amazon up. I'll tell you what. That's where I'll do my gamble. I'm going to do a gamble on Amazon. Because if Snow flies, their guidance is good, and what they say is going really well with their business model, then everybody's going to say, well, Amazon's probably going to come in stronger than expected AWS next quarter as well, which will lead people to buy Amazon stock tomorrow and into Friday. It's like I think it was a $93 gamble I got here going. Yeah, about $93 I got on the line. Come on, Snow. Need you to come in, baby. So break even on this one's $147.93 by Friday. I'll likely sell it off tomorrow for whatever it's going to be worth. So the risk is, I did hear, well, Salesforce, if Salesforce comes through.
See, again, that they can sustain that double-digit top line and, again, continue to commit to the margin upside.
And in terms of, AI and
Salesforce could screw me, though. If Salesforce comes in with weak numbers, that could screw things, because Salesforce is a big dog. I think Snowflake matters more to Amazon and how people think about AWS than a Salesforce does. But Salesforce could screw up the show.
24,
You're a
not
heavyweight.
this year, and it will have a meaningful impact to their business. If you think about you're using their products today, you're a service representative, the AI agent can effectively help understand what is Mike looking for, what can I provide to you when you call into a call center. Do I even need to talk to a rep? When you have a sales engagement, you may be a VIP, which you are, and you effectively should get special service versus myself. I'm not a VIP. So if you think about what happens in terms of AI for Salesforce overall, there's an incredible opportunity. There's so much data trapped in Salesforce, and many users of Salesforce effectively say that they spend more time feeding Salesforce the data versus Salesforce giving them the data back. We are users at Jefferies, and I think a lot of users feel that the system can unlock a lot of that information. So AI can make this available to the end users in a way easier way that they don't have to dig around for it. That is not necessarily the case today. That will be the case into 24, and we're very bullish that they can unlock this. But again, if you're very transparent, we believe Microsoft and Adobe are way ahead of their AI capabilities. They're monetizing it in a big way. We think Salesforce was lagging a bit, but has an opportunity to catch up, and that'll be a 24 catch up in our opinion.
I was just looking, just valuation-wise, like on a free cash flow yield basis, Salesforce is now a good deal cheaper than Microsoft. That didn't used to be the case. Is that something that should converge? I'm sure you probably think Microsoft is well-positioned too, but it is much more richly valued.
Yeah, that's right. Microsoft has the best product cycle of anyone in software right now. The opportunity to double prices is incredible for Microsoft. So, yeah, we believe it'll converge. And to your point, Salesforce does trade at a discount on many of the valuation metrics, and we think that's why we believe the stock can continue to climb to 275 to 300.
It's funny. What did I tell you guys last year? I said, Wall Street, they love all these freaking stocks. They're going to come running back to them all. They could act like they don't want to own them, but they're going to come running back to them. And sure enough, that's exactly how this whole year has played out. All these companies these are all their favorite stocks, man. The Metas, the Salesforces, the Amazons, all these stocks. And sure enough, exactly what I said was going to play out, played out. They're all coming running back to these stocks, left and right, just as I knew they would. They can't resist, man. You can't resist. And it's either you hop on the bandwagon or you get left behind. It's really only one of those two scenarios. You either hop on the bandwagon or you get left behind. There's no in between. And so, it's just funny, I knew they would come running back to all these guys. I freaking knew it. Foot Locker reported earnings. The earnings weren't good at all, really. But, like I said, as long as you don't come in with end of the world and your stock's priced for end of the world, you see a massive upside, right? And that's exactly what happened with the stock price here today. It was expected to be a dumpster fire quarter, and it was pretty much a dumpster fire quarter. Total sales decreased 8.6% as compared to last year in this third quarter. Comp store sales decreased 8%. Gross margin declined 470 basis points, which is basically a fancy way of saying 4.7%. Net income was only $28 million compared to $121 million in the same quarter last year. So pretty much a dumpster fire quarter, but the stock's up 15+% here today because it was already priced for end of the world. They didn't come with end of the world, and, you get rewarded for it. So now what it's about, and I'll have to listen to a conference call tonight, but now what it's about is Mary Dillon in 2024 specifically is getting this company in a place where they can start putting up great bottom line growth in 2024 on a year-over-year basis. If they start doing that, next thing you know, stocks will be back in the 30s and then approaching 40s. But she's got to come through with the numbers now. This recent move up is just like, belief that she's going to come in with the numbers. If you're going to get the next move up, you actually got to come through with the numbers. That's how you get back to where you used to be, right? Then if she wants to have the stock go past where it used to be, which let's call it a $40-something stock, then you have to obviously come in with numbers better than you used to come in with, a couple of years ago or so. So it's a whole process, that has to kind of play out there. But and as far as balance sheet goes, sitting on about $187 million in cash and cash equivalents, debt of about $449 million. Their inventories are exceptionally high, which is not good. Unless they move a lot of product this holiday season. They need to They need to have a big holiday season, man, because their inventory is way too freaking high. Look at this. Merchandise inventory is $1.9 billion. That's 10.5% higher. I mean, geez. And there's a really, really high number there. Really high number. So, yeah. We're also going to get, after the bell here today, you get PVH reporting. Victoria's Secret is going to be reporting. Five Below's reporting as well. So, should be actually a fun after hours here. Earnings alert, earnings alert.
Are viewing this hiking cycle, where we're at in it, and what that's going to mean
to
Salesforce
numbers coming.
Actual cuts next year at a time where the market's aggressively
Get ready,
pricing
folks.
that in.
Get ready.
Yeah, well, I think you're going to see a divergence of opinion as we have all
Salesforce
along.
popping.
I think when you heard Powell at the last Fed meeting, he said they've pretty much
We
got
gotta
it
pop.
right.
We gotta pop.
And so
Pop, pop,
I
pop,
think
pop.
that I would discount his comments. I mean, I think the market is clearly telling us the Fed is done hiking rates. And right now, the market is the Fed funds futures are discounting about a full percentage point cut. And in fact, if you look at June, the probabilities are about 92% for a cut. And in March, it's already up to 44%. So I think that you look at all the economic slowing and wages and jobs, that sort of thing. I think that there is, it's clear that things are slowing. And so, and inflation is coming down. And you saw this morning, with the revised third quarter GDP, showed real growth and real
get the numbers,
productivity
CNBC.
and a slight drop in
You guys get those numbers early.
Inflation. So we're going to see
4%
more
Salesforce,
when we get
4%.
inflation numbers in.
All right, hold tight. We are ready with those Salesforce numbers, with the shares moving higher in overtime after hours, up about 4%. Julia Borston has the numbers. Julia.
John, that's right. Shares are up about 4% on better than expected earnings. The company reported adjusted earnings of $2.11 per share. That's better than the $2.06 that were estimated. Revenues for the quarter were very much in line, $8.72 billion. But looking at the company's guidance, revenues also in line with estimates, guiding to a revenue range of $9.18 to $9.23 billion. The estimate is for $9.21 billion. But we see guidance here, fourth quarter earnings per share guidance of between $2.25
These aren't
and $2.26.
that impressive.
The estimate is for $2.17. So it's earnings strength in Q3 and better than expected earnings guidance for Q4 that is sending that stock up higher 4%. Back over to you.
That's not even that impressive of beats for Salesforce. Like I told you guys, man, Wall Street's addicted to these stocks, man. They freaking love these stocks. Ooh, Benioff's on Mad Money tonight. That should be intriguing.
Money. Barb, you're a shareholder in Salesforce, and I know Scott was saying time to be defensive in equities in fixed income. But I mean, when you got numbers like this from Salesforce, if this were the regular trading day, this would be new 52-week highs. How does that make you feel, not just about Salesforce, but also about the Dow?
Makes me feel pretty good. I mean, if you've been looking at the action in all the big tech growers, and whether you saw, Palo Alto recover, you saw the stock market action today, Microsoft, all these names, and I think Salesforce, it's been a question because their whole thing has been the last year or two restructuring, really focusing on profitability, which is still below their peer group. And they've had a little decel in revenue growth, but they have huge potential going down. So their guide going forward. So their guidance is very important. They have not even begun to tap in the AI opportunity. And some would argue they're a little bit behind there, but there's huge potential in so many ways for them, not just cross-selling into their existing base, but also in new business. So we also have to see their guidance on what they see with their customers.
Okay, I also want to mention Pure Storage numbers are out. We'll bring those to you in just a moment. That stock is moving down about 9.5% at the moment. Can we
Snowflake.
do those now?
Nice beat.
Okay.
Nice beat for Snow.
We'll bring those to you in just a moment. Scott, you're
$21 million
the one who's a little more
beat.
defensive here. What's the impact?
I bet you their guide's good too. I bet you their guide's good. Well,
I bet
John,
you
it's
I
good.
think you have to look beyond,
I told you
earnings
guys.
season is what happened before, and we're trying to look ahead. And, today's the beige book today, I mean, I think it just showed exactly what we've been thinking. And if I could look at my list, consumers are pulling back. They're more price sensitive. The labor market's easing. Credit's tougher to get. Delinquencies are rising. Inflation's moderating. That's good. Pricing power is waning. I mean, I think all of those things suggests we're going to see a slowdown here, and it may, we're looking for even
Pure
possibly
Storage
a
getting hit
recession
big.
as we move through
Big.
the year. So I think there's some headwinds out there. I think it's not all clear. I think I can say with quite a bit of certainty,
nice beat, but the stock's down big.
If this core inflation hangs up in this 3.5% to 4% range,
Look at Snow.
I mean, the Fed might watch it for a few months. But if it's hung up there, they're going to raise rates again. I mean, they're not going to put up with 3.5% to 4% core inflation. So is it going to move down over the course of the next year? We think
Earnings
it will,
alert.
but it
Oh,
could
Pure
hang
Storage
up there
revenues
for
in
a lot
line.
longer than some people think.
All right, makes sense. Let's get to those Pure Storage numbers now. Let's see the chart. Yeah, it is down about 13% at the moment after hours.
See if Amazon
Revenue
moves
came in
later after
about in
hours.
line at $762 million for Q3. Subscription services revenue about in line at $309.6 million. Earnings per share, 50 cents adjusted versus 40 cents expected. So all of that is good. The guidance is where there got to be some questions and concerns here. The street was looking for $919 million, if you round higher, in Q4, fiscal Q4 revenue.
Oh.
And Pure is guiding to 782. Also to operating margins. Pure is guiding to operating margins of 19%. The street was looking for 21.6%. That could be why the stock is down. Once again, Pure Storage's CEO is going to break down these results with us in just moments.
Look at that
later in
guy.
the show before he speaks to analysts on the earnings call. And more,
Looks
we've
like
got a
he
lot to talk about.
Lives on a boat.
We really
He looks
have
like he
a lot
lives
to
on a
talk
boat.
about. And in a day that is very much defined by tech and retail earnings, we have another mover
boat in
to tell you about in
Seattle.
the meantime, and that's Snowflake. Those results are out. Steve Kovac has the numbers. Steve.
Yeah, Morgan, and it's popping here on a beat on the top and bottom lines and strong guidance. So let's go over these results. EPS coming in at 25 cents adjusted compared to the 16 cent expectations. Revenues coming in at 734 million versus 713 million expected. And this is product revenue guidance that they're giving, not the full guidance, but it is mostly product revenue. That is also beating expectations between 716 and 721 million. Street was looking for 702 million in product revenue for the current quarter, Morgan, and we see shares up about 8% now. I'll send it back over to you.
Okay. Steve Kovac, thank you. Snowflake CEO Frank Slootman will discuss those results during an exclusive interview tonight.
Dang, everybody's going on Mad Money tonight.
To bring this back to
We're going to react to that conference call. Let me see if the conference call is at 1:30 or if it's at 2.
tech side, I know you've continued to be.
Okay, so here's Salesforce for you guys. Or no, excuse me, this is Snowflake. Snowflake. There's the Snowflake for you guys there. They get a D grade income statement. Some issues with Snowflake. Obviously, good revenue growth. They kept cost of revenue in line, too. That's impressive. So their gross profit obviously exploded year over year. Sales and marketing was up quite a bit year over year, but you can understand sales and marketing being up. You're an expanding business, right? Where they had a problem, research and development is out of control for them. R&D was up, 50% plus for the company on a year-over-year basis? That's out of control. I mean, that's just damn out of control. General administrative, they kept that pretty in line. I thought that was good. So the total operating expenses actually was up versus gross profit. That's, no, you shouldn't see that. Operating loss expanded for the company year over year. Net loss expanded for the company year over year. So I actually grade them a D grade income statement there. Next up is Salesforce. Grade A income statement for Pure Storage. Look at that. Product revenue up quite a bit year over year. Subscription services up substantially. Total revenue with a very nice increase. Somehow they brought down product. Cost of revenue for product, they brought it down actually. About $8 million, $9 million year over year, which is shocking. Because product was up $20 plus million. So I don't know how they pulled that magic trick. That's why I called it a magic trick. I was like, damn. Subscription services up, but not nearly up as much as obviously the revenue was up. So that's impressive. Gross profit up substantially year over year. R&D they kept roughly in line. R&D they kept roughly in line year over year. Sales and marketing, they did increase it, but it's increasing business, so you can kind of understand that, right? G&A, they kept it roughly in line year over year. That's impressive. So total operating expenses for the company didn't go up nearly as much as gross profit went up, which is going to bode very well for your bottom line, right? Income from operations went to $74 million versus $9.1 million in the same quarter last year. Net income went to $70 million versus a loss in the same quarter last year. And obviously their EPS skyrocketed. So damn. Good for Pure Storage. Very impressive. Good for them, man. I might have to take a deeper look at Pure Storage. You know, if I ever see a company just come out with a grade A income statement like that, it makes me say I got to take a look. You know, Zoom's a perfect example of that. Zoom came in with a grade A income statement. And I said, damn, I got to take a little deeper look at Zoom. Then I saw the balance sheet. I'm like, oh my gosh, they got a freaking grade A balance sheet as well? And so I was like, wow, grade A income statement this last quarter, grade A balance sheet, it's worth me at least looking into, right? You know, like it's a level of respect, I would call it, in the market when you can find a company that has, you know, numbers like that. So, yeah, this Pure Storage stock's down big. Let's take a peek at, let's see, forward PE. Not high. Not high. What's the catch? There's got to be a catch, right? There's got to be a catch. There's got to be a catch. Pure empowers innovators to uncomplicate their data storage forever by delivering a simple evergreen platform that enables everyone to turn data into intelligence and advantage. Okay. So are we talking like, want to be Palantir? What are we talking about here? Industry first paid power and rack commitments in Q3. Pure tackled the growing challenges of managing rising electricity costs and rack unit space with the introduction of its first of a kind, which will pay for its customers' power and rack space through Evergreen's One Storage service, blah, 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 taking responsibility of the associated costs of power and rack unit for to run our offerings. Storage as a service innovator, already a leader in the service level agreement guarantees, Pure added 3 SLA guarantees for no data migration, 0 data loss. Damn, man. I kind of almost want to listen to their conference call instead of Snowflake's. After Snowflake puts up a D grade income statement, right? So Snowflake's obviously top line's very exciting, their gross profit's very exciting, but then their spending's out of control at Snowflake, right? After seeing this company and their grade A income statement, almost makes me want to listen to freaking this Pure Storage's conference call. So something was wrong with their business model, and now it's not wrong anymore, right? Because look at product revenue. Product revenue increased $22 million year over year, but if you look at it in the past 9 months, it's actually declined, right? So that tells me something was a problem for this company, maybe in the first quarter of their year or something like that. That's intriguing. Now, the subscription revenue's been a beast for the full year so far. I'm going to have to look at this company. Damn it. As if I didn't have enough companies to already look into. I got to add it. Got to add it to my potential buys list here. This damn list is too long. Come on, man. What was their ticker symbol again? Was it PSG? What was PSTG? Pure Storage. Got to add them to my watch list. I'll have to dig into that company and see if there's something there. Stock's tanking big. Salesforce up 7%. Snowflake up 6.6%. Snowflake would be up huge, like 10% plus move, if it wasn't for their spending out of control. I think that's what's weighing on the stock. Everybody's looking at the revenue numbers, the guide. They're like, okay, this is good. And then they look at the expense. Snowflake has an expense problem. That's in my opinion. They're out of control. They're out of freaking control. Look at Pure Storage getting leveled, 16% down. Woo! Big down. Big down. Maybe, I got to do a lot of research on the stock. There might be something going on that is really detrimental to the business. I'll have to listen to a conference call and get up to date. I mean, this market cap could be under $10 billion tomorrow. Oh, there he is. Okay. Oh, what? Why didn't you guys tell me this? Why didn't you guys tell me this? Thank you for telling me. I had no clue he was on here. What?
If you haven't already...
This is perfect. We got just enough time to watch this before the conference call starts at Salesforce. Or, I mean, Snowflake.
Veteran media exec and former group chief exec emphasizing it because there's such an emphasis on how... So, John, seems like a pointed response getting ahead of that Nelson Peltz push.
So that's how we should view this. This is kind of like a tight end move, trying to block out Nelson Peltz from getting on the board by saying, look who we have now.
Well, look, board. So that's...
Let's take another look at Pure Storage. Shares down about 15% after hours after providing guidance that disappointed the street for the current quarter. Joining us now is Pure Storage CEO Charlie Giancarlo. Charlie, thanks for coming on. Let's get right to it.
No way. No way. No freaking way. I told you guys. What did I tell you? I said, the man looks like he lives on a boat. Look at what he's got behind him, an anchor. I told you. The man looked like he lives on a boat. He's probably recording this from his houseboat. It looks like it's not quite even, so the boat's probably tipping over the side a little bit right now. I'm telling you, man, that's a man that lives on a houseboat. I know a man that lives on a houseboat.
Q4, it looks like it's about in line.
Never trust a man wearing a fedora.
The previous quarter was, but the street was expecting a big surge in revenue.
Right. Well, what's really happening, and I think as the street analysts and investors pour through the numbers, what they'll find is it's actually a good story. Our accelerated transition towards a consumption and subscription model is really having an effect. And what we're seeing is that as we move to the subscription model, of course, that means that near-term CapEx revenue is substituted by longer-term and richer subscription and consumption revenue. And most of that, most of the change in the forecast is really due to that accelerated approach towards the consumption model. Even with that, though, if I could add, we're still the only storage company that's growing this market. The overall market is declining. All of our major competitors are, their year-over-year growth is negative. Our year-over-year growth continues to be positive, even with the headwind of an accelerated consumption model.
It's an expectations game for sure. Also looking at operating margins projected for Q4, I think you said 19%. The street was expecting 21.6. Does the switch to subscription explain that as well?
It does, because of the deferral of the revenue. And so your costs, your costs are your costs. The deferral of the revenue changes the margin profile.
What are you seeing in Flash? I was just speaking with a rival in the space, NetApp, today. It had a report last night. As you mentioned, it wasn't so much a top-line story for them, but bottom line was stronger than the street expected, and they got some benefit from their Flash pricing. What are you seeing there?
Well, we have record gross margins this quarter, so Flash pricing, Flash product pricing remains strong in the market. So overall, that was good. What we are seeing, though, is the transition from disk to Flash. As I've said in the past, I think within 5 years, Flash will replace all disk, certainly in enterprise and increasingly in the hyperscalers as well. So this is a trend that we continue to pursue, in fact, lead, and believe that that the wind is at our back in that sense.
Charlie, it's Morgan. You mentioned the fact that you're the only one growing in the storage market right now. What do you attribute that growth to? How much of this is the impact of AI on your customers' spending and what that means for storage requirements versus other things?
Yeah, well, we had a double-digit number of AI wins this past quarter, but frankly, AI is still overall a relatively small portion of the overall storage market, which is huge, right? Over $50 billion. And, our success really springs from several things. One is we bring to our customer, for the first time in storage, really, a single operating environment that really manages all of their different types of storage. Block, file, and object at all the full range of price performance, whereas competitors generally have multiple different products to address each specific use case. And the second thing is we've really brought what we call a cloud operating model to operating the storage. It is far more reliable. It operates, completely through a set of APIs. It can be consumed like the cloud, which is our growth of the Evergreen One consumption-oriented business model. It can operate both on-prem and in the cloud, and the our entire suite of capabilities can be managed like the cloud. That is as a pool of storage, as a cloud of storage, rather than as individual arrays. So these are really firsts in the industry, and it really accounts for our growth and success.
All right, the stock coming further off the lows as you've been talking to us. We'll let you get ready for that analyst call.
Okay, so
No excuse.
yeah, interesting. I'm gonna dig more in. All right, Snowflake conference call time.
Q3 FY 2024.
I'm gonna go grab some Oreos.
Conference call. My name is
trying to
Hannah,
pull
and
to
I will be
300.
the moderator for today's call. All lines will be muted during the presentation portion of the call, with an opportunity for questions and answers at the end. If you would like to ask a question, please press star 1. I would now like to pass the conference over to our host, Jimmy Sexton, Head of Investor Relations at Snowflake. You may go ahead.
Our strong cash position allows us to opportunistically repurchase shares. In Q3, we used $400 million to repurchase 2.6 million shares. Year to date, we have used $592 million to repurchase 4 million shares at an average price of $147.50.
All right, question, guys. I'm going to take a poll. Elon Musk is talking live right now. Do we want to watch Elon Musk or do we want to continue to watch the Snowflake call? Let me know in the chat. I'll do whatever I see more of. I will do that. If you guys want to continue this Snowflake call, we'll do that. If you want to listen to Elon Musk live, we'll do Elon. Okay?
I hope it is. Hey, Bob, if you're in the audience.
Well, let me ask you then.
That's how I feel. Don't advertise.
How do you think then about the economics of X? If part of the underlying model, at least today, and maybe it needs to shift, maybe the answer is it needs to shift away from advertising. If you believe that this is the one part of your business where you will be beholden to those who have this view, what do you do?
Why?
I understand that, but there's a reality too, right?
Yes. No.
I mean, Linda Yaccarino's right here, and she's got to sell advertising.
Absolutely. So, totally. So, no. Actually, what this advertising boycott is going to do? It's going to kill the company.
And do you think that
and the whole world will know that those advertisers killed the company, and we will document it in great detail.
But those advertisers, I imagine, are going to say, we didn't kill the company.
Oh yeah.
They're going to say,
tell it to Earth.
But they're going to say, Elon, that you killed the company because you said these things, and that they were inappropriate things, and that they didn't feel comfortable on the platform, right? That's what they're going to say.
And let's see how Earth responds to that.
Okay. This goes back to.
We'll both make our cases,
right?
And we'll see what the outcome is.
What are the economics of that for you? I mean, you have enormous resources, so you can actually keep this company going for a very long time. Would you keep it going for a long time if there was no advertising?
I mean, if the company fails because of an advertiser boycott, it will fail because of an advertiser boycott. And that will be what bankrupted the company, and that's what everybody on Earth will know.
What do you think then of the? This goes back to the idea of trust, though.
Then it'll be gone, and it'll be gone because of an advertiser boycott.
But you recognize that some of those people are going to say that they didn't feel comfortable on the platform, and I just wonder and ask you and think about that for a second.
Tell it to the judge.
But the judge is going to be.
The judge is the public.
And you think that the public is going to say that Disney is making a mistake?
Yes.
And they're going to boycott Disney?
They already are.
Well, there are some that are for lots of different reasons, but you think that this is going to, that you have this goes to actually the interesting of power and leverage.
Let the chips fall where they may. Let the chips fall where they may.
Can I ask why that is the approach? And I ask it because you've been
What's the other approach?
Well, you've been very particular about the approach to Tesla. When you think about the engineering involved in that, the approach to SpaceX, the approach to some of the stuff you're doing with AI has been very specific, right? There's not a let the chips fall where they may approach to those businesses, I don't think.
No, we focus on making the best products, and Tesla's gotten to where it's gotten with no advertising at all.
I understand that.
Tesla currently sells twice as much in terms of electric vehicles as the rest of electric car makers in the United States combined. Tesla has done more to help the environment than all other companies combined. It would be fair to say that, therefore, as a leader of the company, I've done more for the environment than everyone else, any single human on Earth.
How do you feel about that?
How do I feel about that?
Yeah, no, I'm asking you personally how you feel about that, because we're talking about power and influence, and
I'm saying what I care about is the reality of goodness, not the perception of it. And what I see all over the place is people who care about looking good while doing evil. Fuck them. Okay?
Let me ask you this, because I think part of this, by the way, there's some people who said, look, owning X to begin with has just created problems, that you've created so many amazing things that are changing our world. And I know you want to make X this fabulous town square free speech platform, but that unto itself, that has created such a distraction of all of these things. This is the conversation we're having. We're not focused.
One word, Kanye.
On Tesla, you have your Cybertruck deliveries tomorrow,
Kanye.
And everything else that you're doing. But
yes,
is there any?
It will be the biggest product launch of anything by far on Earth this year.
Is there any part of you, though, that just says, you know what, I just shouldn't have done this, or maybe I should sell it or give it away or do something else with the X piece of it?
Yeah.
Given the propensity for some of the things that you do and say on that platform to create these issues.
Yeah.
And do you feel like investors have invested in something that hasn't happened yet? Is that fair to them? And that's the other question that people have about that.
Well, I mean, I think they've all, with rare exception, thought it wasn't happening. So they were investing, despite thinking, they're very clear that they don't think it's real. So they're not saying, oh, we just believe everything Elon says, hook, line, and sinker. But the thing is that, I mean, I would be a fair criticism of me to say that I am late, but it isn't. But I always deliver in the end.
Let me ask you the final question. I took note of this.
Put.
It was November 11th, and you took to Twitter and you wrote only 2 words. You said, amplify empathy.
Right.
I was taken aback by that, given all the things that have been going on in the world. Do you remember what you were thinking?
So, interesting thoughts. I'm going to put together a recap interview of some of the best parts of this interview and release that on the main channel tonight, because obviously there was a lot there. I mean, my gosh, he covered a lot of different subjects. I'll put together the very most interesting parts in a main channel video tonight and react to that. Usually I just react to things on the reaction channel, but I'm actually going to put this one on the main channel because it's too big of a, obviously, subject for just being on the reaction channel. So, but obviously he spoke about Tesla a little bit. I would love there to be more talk about Tesla. I mean, obviously there's just so much to cover with an Elon Musk interview that, Tesla's only going to get a segment of it, but I wish they talked more. But we'll react to that. We'll react to the AI talk. We're going to react to some of the Jeff Bezos stuff and a few other parts that I thought was interesting, the OpenAI. So we'll get into all that. But anyways, guys, that's going to cover the live stream for today. So Salesforce finished up after hours about 8%. Snowflake finished up after hours about 7%. Pure Storage was the big L after hours. That one's down over 14%. I'm going to have to dig in there, see what's going on. Dow Futures Rise, getting close to a new high. PVH was down after hours, and Victoria's Secret down after hours. So, yeah, what a live stream. I was not 4 hours. Are you kidding me? A 4-hour live stream. Oh, my gosh. That's what ended up being a 4-hour freaking live stream. So, yeah, tomorrow on the live stream, we got earnings coming after the bell, but also we're going to have the Cybertruck event tomorrow, folks. The Cybertruck event's tomorrow, so we're likely going to watch that and react to that live. As long as we can get it up. Like, Elon says he's only trying to put it on Twitter, which is a dumb move. He needs to put that. It's a very selfish move. He needs to have that on YouTube as well. I'll be so disappointed if he does not put that on YouTube. That would just be such a selfish move, like just trying to, have everybody go to X, and it's not going to be as good of an experience. Like, put it on YouTube. It needs to see, as many people need to see that as possible. Like, if you're not going to put it on YouTube, you're going to miss out on massive amounts of extra people to see the Cybertruck event tomorrow, which they should see that event. So hopefully he makes a good decision for Tesla and has that go on YouTube as well. Because to just put on X, I think is a very selfish, poor idea overall. Like, there's no debating that, really. It just is. So, but anyways, guys, appreciate you. Much love as always. Thanks for being here for a 4-hour Beast live stream, the longest ever in history. And at least for my channel here, much love and appreciate you. Peace.